Good morning, good evening, good night. Welcome to another very special edition of Can't Read Market Talk. And today's edition is called America in a Recession. So to America the brave, what is happening? Well, wise men say that when things look the way they do and they've been going on for the longest time, you got yourself a little bit of a problem here. So I'm looking at some of the stocks I have here, and man, some of them are skyrocketing today. Holy smokes. All right, let's go over the markets. The S&P TSX, Toronto Stock Exchange, is at 16,268, down 178 points. The S&P 500 is at 2,887.63, down. We got Andrew calling into the show here. Andrew, you there, buddy?
Yeah, I'm here. Can you hear me?
Yeah, I can hear you perfect. You're live. So let me just go over some of the numbers right now we're looking at here on Yahoo Finance, okay? So The S&P TSX sitting at 16,265.54, down 182. The S&P 500 at 2,887, down 52.62. The Dow Jones sitting at 26,056, down 516 points. Canadian to U.S. dollar is hovering around 75-cent mark. Oil dropped again to $52 a barrel, down $1.28. Bitcoin, oh man, it's at 10,995, seeing a little bit of an increase from yesterday, but still down 36 points. And gold is up above the $1,500 mark, up $16.40 for spot. Russell 2000, 1,478, down 14.51. 10-year bond is dipped to 1.6, down 0.043. Nasdaq at 7,779. Down 129 points. Volatility is up 20.57. And over in the UK, the FTSE is sitting at 7,129. We have Andrew Baker today on the show. Let's take a quick look at silver first. Here's silver. It is up 37 cents per spot ounce, per troy ounce at 17.58. New high for the day, and it's the high for today, and it keeps climbing from what it looks like here, according to this graph. And we have, let me close that. We got Bloomberg and Bitcoin down at the $8,243 US mark, down 1.14% today. It gained a bit in the morning and it's dropped back at night. So I think the fear of cryptocurrencies, people are kind of maybe looking at a globalized cryptocurrency that may actually take over, or something that's regulated by the federal governments. So today Andrew's calling it. He feels it. Andrew, you feel it in your bones. Is America in the recession? Go ahead, buddy. It's all yours, and please don't swear.
Yeah. So I've been pretty much on the fence for quite a while. I've been waiting for something to happen. Usually, you get as you get closer to these sorts of things, the shocks start to become more and more frequent, and they're closer and closer together. Now, it's pretty obvious that that whole repo market thing, was it last week or 2 weeks ago, has then led into, or it's telling us that there's something wrong with someone that needs short-term finance pretty heavily. And then you've had the ISM PMI, the manufacturing PMI, come out, and all of the numbers are pointing to recession. So, I mean, I've been seeing that from China for quite a while, but for it to now start showing up in the US as well, it's pretty worrying. What do you think?
What do I think? I think that everything's pointing towards it right now. Everything, we saw layoffs on Freightliner yesterday, that they announced huge layoffs in the trucking building industry. Now, if Freightliner is not building trucks, no one's hauling freight. If no one's hauling freight, what have you been saying for the longest time? There will be a collapse in the
commodity price of fuel or energy prices.
Right. So we've seen. So as of today, okay, we've seen a breakdown in the housing markets. We see governments scramble or create ways to go ahead and put more mortgages on the books by liar loans and first-time mortgages and all this garbage, right? And then no interest, interest-only mortgages. And then we see a breakdown in the auto sector where people aren't buying cars anymore, and I've had quite a few people tell me that they have turned their vehicles in that they bought a year ago and took a loss on the down payment and took a loss on the payments they made and just walked away. Then we have now a breakdown in the in the transportation sector, where you're starting to see that they're no longer building transports to transport crap around. So that's telling us a lot of indications that recession time is officially here when you start to see stuff not being transported. So, and the banking system, and then you got the inverted rates. Oh, hold on a second. Here's $1,000. In 10 years, I'll give you back 10,100, but in 2 years, I'll give you back 10,500. This is not looking good on any angle. Andrew, tell us.
So for me, the other thing that's been really interesting is this really, really rapid decline in credit quality. That tells me that there's a really desperate search for yield, and you're very close to the end. Like, I don't know if you've seen it in Canada, but in Australia, you've had Afterpay, Latitude Pay, Zip Money, all these. They're basically payday lenders, but they've become so prevalent that they're almost seen as normal. And I don't see a payday lender as being normal. I don't care what you call it. It's still a payday lender. Mm-hmm. Like, this to me, I mean, even with those things out there, the household credit rate, or the mortgage credit rate, is the lowest it's been since the records have started in Australia. Mm-hmm. So that's a pretty damning.
But Andrew, for every dollar in Australia makes, they owe back $2.
Yeah.
So that's pretty bad for the household GDP.
But that's just private debt, though. That's just private debt, though. That's not including government debt.
Oh, no. I like to factor in private debt into this, because if people aren't spending, consumer confidence goes down. Consumer confidence goes down. You start
but this is the thing, Mike. Huh? This is the thing. Most people, when they talk about debt, they don't really talk about private debt that much. They talk about government debt and how do we reduce our deficit, and like, how do we make sure that we run a budget surplus? And it's just like, it's all very well to run a budget surplus, and it's all very well for households to save. You can't do both at the same time. You need one or the other. Otherwise, you go into recession. If that's what you want, then that's what the outcome is going to be. Unless you can massively export, you have a massive trade surplus that you use to monetize government debt. But
there's
only so many countries that can do that. Yeah, I mean, every time I hear people start talking about how China and India are like massive polluters, and how they shouldn't do anything about their pollution levels because India and China are polluting so much, it's like, yeah, but who's doing all the manufacturing of the globe? Like, you guys used to do this manufacturing, and it's all been exported to China and India, which is why they're now polluting. Right. But they're not polluting to produce for themselves. They're polluting to produce goods and services for the Western world. So it's kind of like, well, mm-hmm. I mean, you can make the argument however you want to make it, but you've got to be realistic about it. But yeah, I mean, this to me screams that the US dollar is going to get much, much higher than what it is now. Whether or not that's good for gold and silver, I don't know. So I'm holding a little bit of US dollars, a little bit of gold, a little bit of silver, just to try and hedge my positions. I mean, I live in Australia, so I'm doing everything I can to get out of Australian dollars.
Right. So do you see other people following your footsteps and getting out of the Australia and dumping the Aussie dollar?
Yes and no. I mean, there's a bunch of laws that they've tried to introduce as of late, like that $10,000 cash transaction limit on businesses that comes into effect, or was supposed to come into effect on the 1st of January 2020. But there's now a Senate committee that has to go through. That kind of to me was like an indication that they were trying to reduce the amount of money that was going to go offshore. Mm-hmm. And I have a theory. It's not. I can't prove it just yet, but my theory is that the spike in the repo market was actually either a Canadian or an Australian bank that's facing liquidity problems, mm-hmm. and they went to the repo market, and no one wanted to be counterparty to them. So the Fed had to step in and buy or provide overnight liquidity, and has been doing so ever since.
Right. So are
Um,
we seeing this as an infinity thing that's going to keep going on, or
oh
is
yeah,
this going to
yeah,
be?
yeah, yeah. I mean, Australian Reserve Bank has cut rates again yesterday.
Yes, they did.
Um, but I mean, I don't see that it's going to be enough. Like they said, they're going to cut it because they said it was probably would have been June this year. They cut for the first time in 36 months or something like that. Oh, it wouldn't have been 36 months. It was like 30 months or something like that. And then they said, basically, once we get to 0.5%, we're going to try and defend it. I just laugh because they're not going to defend 0.5% rates.
Well, they
And
have no aggregation, Andrew, to work with. It's good to maybe manipulate rates once in a while to get things back on track or to create a bit of stimulus in the market
but they're
or
not
blah,
going to
blah,
get the
blah.
effect that they want. They want credit growth, right? The government wants
Right,
credit
but when you're
growth.
at 0.5%, you don't have much aggregation left to work with if
But
there's
it's
an
not just
emergency.
that. It's not just that. Our government's going to run the first budget surplus that they've run since 2007. So they're willfully pushing people towards borrowing in the private sector, and then by the same token, the RBA is basically being forced to cut interest rates to make up for the fact that the government doesn't want them to increase credit by
Right.
issuing low interest rates as a government rather than getting them exclusively financed in the private sector. So it's really frustrating to sit on the sidelines and be like, "You guys are really dumb. You're
Yeah.
basically you're pointing the finger at everyone else but yourself
Well, they're
and
committing. They're
letting all these
committing.
things happen."
They're committing economic suicide, is what they're doing.
Well, I mean, it kind of looks like to me that they want there to be a recession.
I
Like,
know, I know, and we've been
it's
talking about this.
weird.
Are the house of cards stacked purposely against them to fail?
I mean, I think every man and his dog leading into the Australian federal election in May was kind of the view that Labor would win, which is the left of centre party here. And then when Liberal Party won, there was a bit of a shock, and I think, I mean, I was kind of like on the fence. I mean, I wanted to see the opposition win because they have better policy in terms of housing, but I was also like, I want to see the current government get in because they've touted themselves as the best economic managers in the world, and they couldn't organize themselves out of a paper bag, let alone run an economy. So, I mean, look, I got a letter back from the former treasurer, who is now our prime minister, when I asked him if he understood that there was a problem with the mechanism that banks use to comply with Basel III. I didn't use those words. I used more layman's terms when I said it. So they probably assumed that I didn't know what I was talking about. And they sent me back a letter with a definition of what a credit rating agency was. And I was just like, I know what a credit rating agency is. I'm pointing out that they have models that will not work in times of illiquidity. Your fundamental assumption is that there's always going to be liquidity. Now, if there may always be liquidity in the US in terms of US dollars because the US economy runs on US dollars. But the rest of the world isn't always liquid in US dollars, and that's what you need to transact commodities. So this whole notion that we are somehow going to be fine, or that when our 90-day bank bill swap or our short-term financing is going to be fine, when a lot of it is really, really poor quality loans. And in fact, the amount of mortgage fraud so far this year has actually increased.
Right. With liar
It,
loans, right?
yeah, exactly. You cannot do this. Like, as soon as I saw prices look like they were bottoming and starting to go back up, I was like, there must be more mortgage fraud. There is no way that an economy can be shrinking or can be flatlining with little to no loan growth, yet prices are going up. it means people are taking on loans increasingly that they cannot service,
Right.
and they're either getting people to be guarantors or to lend them money via poorly documented processes to get loans. And at some point, that's going to fall over because the mechanisms that the banks have used to get this short-term financing are going to become very illiquid. And that means that their short-term financing costs are going to go up, that was basically the repo market. But I think that's going to play out even further. It's going to move along the yield curve. It'll go towards like 1 month bond, 3-month bond, up until probably 12-month bond.
Wow. So
that's kind of what
we got Pure Grosso saying in the comments, it always drops faster than it rises. That's usually a sign of it's ready to croak.
But I think it always falls faster than it rises because the rise is entirely driven by credit demand, or not entirely, but it's increasingly driven by credit demand.
Right.
The higher your stock of private debt is, the more you will rely on credit for each amount of growth that you get in the economy, because the turnover of existing money is more and more focused on servicing existing debt. When you have more debt, you have to, just to break even, you have to use more and more of your income to service that debt. Now, at some point, if there's no credit growth, then you cannot service your existing debt, period. And the fact that credit growth is trending down and has been doing so since 2015 in Australia, and it's been accelerating for the last 6 to 9 months in terms of the rate of decline of credit growth, that says to me that there is very little confidence in the Australian economy. Now, I'm seeing the same thing in the US. I see the same thing in China. I see the same thing in Canada. I mean, Canada's not as bad. I think Canada's lagging Australia a little bit.
Yes.
But
Australia is ahead of the pack when it comes to that, and then I think it's followed closely by the United Kingdom, and then Canada, and then we fall back to, and then Australia, then New Zealand.
EU, yeah, I think the entire EU is kind of in this malaise where they can't get out of the trap that they've set for themselves, which is it's a function of. I have this really weird theory, right? The theory is that economic growth is very, very dependent upon how efficiently economies exploit potential energy in terms of commodities. So potential energy is like, crude oil, coal.
Since you're on let me ask you one quick question. Could America survive on a $52 barrel right now? It's down $1.31 again. It's crawling towards $51. Could America survive off a $51 barrel? They're not profiting.
I mean, I don't think that the US only relies on spot crude, but I think there's going to be. It's not so much whether or not the US can survive on crude oil. To me, the concern is, can the people that have financed those projects, so those infrastructure expansion projects or pipelines and things like that, can those people afford to take the liquidity hit from from the people that they've lent to starting to lose money? And I don't think the answer to that question is yes, given the liquidity constraints in the global economic environment that we're in now.
What if they pass? What if the U.S. Congress or somebody in one of those super committees passes a law that all banks need to have at least 30% in case of 30% in reserves in case of an emergency? Could this help?
No, but this is the thing that I was raising with Basel already. The Basel requirements increase or have been continually increasing the amount of capital that the banks are required to have in reserve. So in Australia, in like 2011, 2012, it was under Basel 2. It's under Basel 3 now, which means that the capital requirement's gone from 10.5% to 13%. So it means that the amount of leverage that they can have is less and less and less.
Right.
Which means that, in theory, they must decrease the amount of credit growth in the system if the government isn't going to step in, which they're not doing here. So, to me, it sounds like it's by design. and I can't see that it would be that much different around the rest of the world. Because it's just Basel is basically a global regulatory compliance mechanism that large institutions have to comply with.
Right, right. So, guys, let's head back here to take a look at the markets here. The Dow is down 506 right now as we speak. We're watching them on the floor right now on the trading floor here on the NYSE trading floor. Things are not looking good. Canadian to US dollar is taking still another hit. Crude oil is still pushing downwards, and Bitcoin, oh, I feel sorry for Bitcoin. Andrew, I know you're not a Bitcoin aficionista and you really don't care, but what do you see them regulating Bitcoin through a government level and banning cash and, creating all these limits and federally tracking everything we do?
In Australia, at least, definitely.
Okay,
I think they're
I
going to
know
try
Australia
everything.
for sure, but do you see it spilling over into New Zealand and the UK, Canada, than the US, or?
I mean, New Zealand doesn't even need to do it though, because New Zealand's already got some pretty draconian laws in terms of deposit bail-in and those sorts of guarantees of banks at the expense of depositors. So I don't think there's the same kind of constraint on capital in New Zealand as what there is here, because basically New Zealanders already know that if things are pretty dire, then they should be looking for a capital flight mechanism.
Right.
So I think Australia has been incredibly vague in the way that the law's been written, because they know as soon as they write something definite that the general public is going to do things to try and preempt any government action on people's deposits. Right. So, like, if all of a sudden the government says you can't have X amount more of foreign capital reserves, so I can't buy more than $10,000 or whatever in cash, it says to me that they're worried that they are not going to be able to control the decline of the valuation of the Australian dollar.
Right. Right. Okay,
like, it's just a theory, but yeah.
Oh, it's a good theory. We got keynotes here. Stocks tumble, bonds rise as growth fears mounts. Oil extends losses after bigger than expected stockpile increase. ADP report shows payrolls at U.S. employer cools in September. Well, obviously, payroll numbers are what you want to watch. You don't want to watch what's happening or what the job numbers are. I don't believe any of that crap. I believe what the payroll numbers are. And
unemployment's 3 to 6 months lagging.
Yeah, and UK construction woe continues as Brexit hits new orders. So give us an update on what you think is going to happen with Brexit, or what you think is going to happen economically with Brexit. Tell us, Andrew.
I think trying to guess what's going to happen with Brexit is a fool's errand. It's like Schrodinger's Brexit. It's either on or it's not on. It could be on and not on at the same time. I really don't know, to be honest. I mean, the Queen could say that what Boris Johnson did in terms of taking Parliament to recess until quite close to the deadline for Brexit wasn't legal, or the High Court said that it wasn't legal, and there could be political implications for him for that. But again, I think they do things like nothing happens without intent in politics. So, I mean, I really don't know enough about what's going on there to be making informed comments one way or the other.
Right. Okay. Well,
I'm more concerned with what's going on in China at the moment, to be honest. And I think Hong Kong is it's kind of in the periphery of news, but it's not at the forefront. And I feel like there's a lot more going on there than what we're being led to believe. And I kind of see the fact that people are protesting so vehemently in Hong Kong as kind of an indication as to what's going on there. Like, China wants to reunify because they see Hong Kong as a hub for introducing new capital into China.
Right. Oh yeah.
But I mean, Hong Kong actually does the exact opposite. It's the capital flight mechanism that Chinese people use to get the money out.
Hmm.
So, I mean, they probably, there's a bunch of different reasons why
Well,
China would want to reunify so badly, apart from the fact that it is
no, they want to
historically
reunify
Chinese.
for financial reasons, but I think the capital flight out of Hong Kong is out of control because a lot of it are hitting the shores of Canada and the U.S. right now. So,
Yeah.
so, so, anyways, I got an
Well,
article here from Bloomberg stating no one can figure out Brexit, so Morgan Stanley let a machine try. So Wall Street uses a quaint model to map out market impacts. No deal sees a 5% drop as FTSE 100, 6% hit in Europe EPS. So they have a
so wait,
graph
so you
here.
think, so Morgan Stanley is trying to use machine learning to figure out the probability of Brexit or probability of certain variants of Brexit? And it could work, but I don't know. Those things have been so wrong for so long that I'm kind of skeptical. You can't really figure out how the minds of parliamentarians work unless, like, if there's financial incentive, that's almost always the thing that dictates it. But there's a financial incentive for not doing Brexit as much as there is for doing it. Like, for people in Parliament anyway. Because either way, they're going to get kickbacks.
Well, it's gonna
It's just going to get
affect a
them
lot
done.
of Europe, especially the German. I think German bonds will get hit. I think German bonds might rise if
Do you
this
think there'd
happens.
be a rise in yield
Yeah.
or a rise in price?
So, okay, what else is big on the news here? Vancouver home sales see a jump of 46.3% in September to near average level. This is now what Andrew goes back to telling us at the beginning of the show. When something like this happens, the governments and the banks, and there's a lot of fraud going on, especially in Vancouver, for a $5.5 million two-bedroom, two-bath, 2,000 square foot bungalow built in
You've probably
1910.
got like valuation fraud.
Yeah.
Like, yeah. Sorry, I'm just having some food.
Are you eating some cereal?
Yeah,
Okay.
bit late, but yeah.
Johnson sends his New Deal plan to EU's Juncker Brexit update. Who inspires business owners? It's always big success. Iran's Hyundai upbeat on European plan to save the nuclear deal. One analysis bold prediction for 2019: the market and investors swarming for one simple reason. North American stocks markets tumble lower. Loonie falls against the U.S. dollar. So you are right about that. We're going to start seeing a stronger U.S. dollar. And
Yeah,
do you believe that the U.S. dollar right now is a good haven? And you said gold and silver?
yeah. So I actually think that gold, silver, and the US dollar are all going to rally at the same time.
Right.
But I think they're going to rally at the same time because once you get to the lower bound and you start going negative interest rates, it's not the same as, because a lot of the time people will say, oh, there'll be flight into countries that have got positive yielding bank accounts or positive yielding government bonds and those sorts of things. And it's like, yeah, sure. But how advanced are those financial markets to be able to take that amount of liquidity? Like, I don't really know the answer to that question.
Mm-hmm.
Like, I looked at Vietnam and I looked at a bunch of emerging markets, Asia and India and all those sorts of places, but I couldn't really figure out what was going to happen. I didn't know whether there was going to be hyperinflation or high inflation there because of the heavy sell-off of their currency versus US dollar, or whether it was going to be people flood into their bond market to try and get some form of yield. Like, I can't tell. So it's
Yeah,
just
well,
been,
that's why they got robots now. I'm just joking. I'm just joking.
No, I know. I mean, but the robot's still not going to be right all the time. So
Of
as much
course,
as you might rely
I'm
on
just
it,
kidding. I'm just kidding. I'm just kidding. I'm just kidding.
I
Let's
don't
see
know.
here. Manhattan resale home prices drop most since 2011.
Yeah.
Why it's so hard to start up to create wealth in Europe? Oh, it's almost impossible. It's not impossible. You got to be really thinking outside the box to create wealth in Europe. Um, is it? Are we seeing it in Australia now, where it's hard for startups and to create wealth in Australia?
Yeah, but I think part of the fact is that the financiers, like the banks and stuff like that, are very reluctant to lend to anyone
Hmm.
because they've got this balance sheet filled with crap, and no one wants to borrow at a high interest rate.
Hmm.
So they're kind of stuck between a rock and a hard place. Businesses don't want to borrow because the borrow cost is too high.
Right.
The only really thing to borrow, the only game in Australia is real estate, which is why all the mortgage portfolios of the banks is like 60% plus of their lending.
That's scary as hell, dude.
Yeah,
Because 30 years ago, that would be inverted. It would be mostly towards small business startup.
30 years ago, we had quite a large investment bubble in. Yeah, it would have been 30 years ago now, or like 32 years ago.
Yeah.
There's quite a large bubble in the savings and loans in the same way that they had it in the US.
Hmm.
But it never really recovered in Australia, kind of flatlined, whereas real estate has really, really taken off here. I think it's kind of similar to Canada, but I think Canada has more of the business sector stuff as well.
Hmm. But a
So
lot
it's
of it
kind of
isn't
hard.
owned by Canadians. A lot of it is foreign owned.
Yeah.
So,
I mean, it's the same here too. It's the same here too.
so over in Hong Kong, protests set to escalate as shooting stirs anger.
Yeah.
Wow. Yeah, it's gonna get to that. I mean, I see. I mean, do you see America jumping in on this one or what?
No. In Hong Kong, no way.
Yeah. Even though it's
I
one of
don't.
the financial capitals of the planet, it's
Yeah, but I mean, if they move into Hong Kong, like you're stirring a hornet's nest. I really don't think that the US has all that much to gain from doing that. To be perfectly honest, I mean, they can
But I
try,
do see
but
a lot of capital flight out of Hong Kong.
yeah, for sure.
Yeah, I see billions, and billions of dollars washing up on the shores of Australia, United Kingdom, Canada, and the United States of America.
But it's nothing. I don't really think it's that. It's big, but it's not that big. There's more flight out of China itself than out of Hong Kong.
Of course, China's got what is it, 301 million millionaires, or 300 million millionaires or something like that. So not 300
Yeah,
million, sorry, 108 million millionaires. Sorry, 108 million millionaires registered in mainland China. That's what they say. Out of 1.7
yeah.
1.7
And
billion
how
people.
much of that? And how much is that? Is them committing frauds to list small to
Oh,
mid cap
like
Chinese companies in the US
95%.
market? Yeah,
Yeah, it's like
I don't believe
95%.
that for a second.
It's all. I'm not saying it's all good stuff. It's all crap, and it's bringing down the country. That's why it's built on
I
a
mean,
stack of
I'm not
paper.
saying Australia is any different. It's just domestic fraud. Well, it's domestic fraud predominantly. It's a lot of people doing stuff like lying about, or like insider trading, or getting tip-offs about like raids and like political insiders and council corruption, like really like low-level stuff that people don't think to look at, or people that aren't in investigative journalism don't really think to look at.
Hmm. Look, gold's climbing up. It's at 1505 right now, up 1690. It's climbing. The 10-year. So let's see the Canadian, the U.S. Yeah, Canadian dollars falling to the U.S.
Yeah.
So we
I
are.
mean, that's what I said. I said this at the beginning of August to you that I expected that the Aussie dollar and the Canadian dollar would sell off, and there's probably a bunch of other commodity-reliant countries
Mhm.
with currencies that are going to fall quite a bit.
Right. Yeah, no, you did. You said it. You said it loud and clear. You've been saying it actually for a
Yeah,
while. So we got
yeah.
the. So what do you see happening? So what do you see happening as the biggest, I guess, event horizon that's going to make America wake up and say, "Look, guys, I'm really sorry to say this, but we are in a recession. Payroll numbers are not adding up. Economy is growing as much as we said it was. Banks are going into smaller banks or smaller lenders are going into default. We're no longer building.
I think they're going to get another Lehman Brothers, honestly,
Yeah,
and I think they're probably going to. nationalize it rather than letting it fail. So it's just who's going to be the counterparty to take all of the losses? I don't really know who that's going to be.
Mm-hmm.
But I don't even think that's uniquely American, though. I think it's around the world they've been relying on the US giving them cheap money.
Right.
And that's going to, like...
Yeah. Okay. So I'm just kind of looking at here, Forever 21 closing down, and that gives you a sign of consumer confidence is down, or people don't have money to go buy jeans anymore. And unfortunately,
Is that in the US as well? That's in the US as well, is it?
Yeah, of course, of course.
Okay.
People are buying everything on credit cards. People buy a microwave, they put it on credits. People go buy clothing, they put it on credit. No one's buying anything from their basically disposable income. It's all.
But it's not just on credit. It's on worse and worse and worse quality credit.
Yes.
Like you're not getting a credit card from the bank and going, yeah, I'm going to pay this. And I'm not going to make them. I'm going to make the entire repayment. I'm not going to just make the minimum repayment and just carry over the interest. They're going to like Afterpay, Latitude, but all of these kind of like quote unquote fintechs that are in the market and kind of are trying to encourage people to consume because there's not really a good way of measuring exactly how much money people are in debt. So,
right. Well, people need to borrow to consume, and here we go. From Bloomberg Economics, we'll rehash this article. ADP report shows payrolls at U.S. employers cool down in September. This is a huge hit to the job growth or the potential job growth that was created. So, payroll at companies in the U.S. increased less than forecasted in September, and the prior month gain was reversed lower, suggesting manufacturing recession, a fragile global economic outlook, and lingering trade war with China are gradually impacting hiring decisions.
I mean, I reckon you could be very surprised and see the US PMI record below like 44, could be like 41, 42 at some point. So
private payrolls increased by 135,000 after revised from 157,000 again in August, according to data out Wednesday. So when they say this, Andrew, the U.S. created 300,000 new jobs or 400,000 new jobs last month, and then we're looking at payroll, it's only 135,000. Could this be like, what are they getting these numbers from? Like, payroll says one thing, but their supposedly job numbers say another.
Yeah, but I think the government is always intentionally slow to revise down. They happily revise up quickly, but if they have to revise down and revise down and revise down, they're going to take their time.
Yeah,
you can generally tell. Because there'll be some kind of like tell in the media, or the president will come out and say something and he's like, that's a bit out of place. I mean, it's kind of hard to tell in the US because the president says things that are out of place all the time. But I mean, for example, in Australia, when the Treasurer comes out and says the banks need to lend more and your credit growth, well, this would have been like late September, the Treasurer comes out and says the banks need to keep the credit taps open, and the August number comes out and it's the lowest on record, and this is at the end of September when the government has September numbers. That means they probably know that the September number that's going to come out is going to be worse than the August number. So those are the kinds of tells that you can look for, but I can't do it in the US.
Well, we got an article that's on the press here from today's date. U.S. slowing down spurs concern of economy is near stalling. I'm thinking that America in the next Q4 of 2019 I think their economy is going to shrink for the first time in a while.
Yeah. Well, I mean, it's not just that though. You remember we had this conversation. The conversation was rally into October and then crater. I think that's starting to play out. Doesn't make me happy to be right. It's just, it is what it is.
It definitely is. It is what it is. So stall speed estimates have declined as potential GDP eased. Slower growth leaves economy in fragile position to shocks. So there it is
Yeah.
there, and the U.S. economy growth rate is losing speed, promoting questions over how slow could it go and still avoid crashing into a recession. I think the last quarter, just like you said, the last quarter of the year, we're going to see a shrinkage in the economy. But I think they're going to just do whatever they can in on just on the ground to keep people at ease, and so there's
But you're not
calm.
going to know that till like June, July 2020 anyway, because they recorded data late.
Right.
So, I mean, for all intents and purposes, you basically need to be looking for leading indicators now. And all the leading indicators say recession, recession, recession. So
Yeah.
that's what my base case is.
Yeah. Well, that's
And
why
I
that's
would
why
be
I'm calling
happy
today's
to be
show.
wrong.
Uh-huh.
I would be happy to be wrong. I really want to be wrong. But
Of course. But all this money printing and all this market spoofing and all this, it's going to have to come to an end soon, right?
yeah.
So something's going to have to give now, especially with the bank frauds, cash frauds. To me, in my opinion now, the banks are just too big to jail.
Yeah. Well, I mean, they are and they aren't. I mean, if you're getting to the point where it's biblical in proportion, and I mean that in the real sense of the word, biblical, where it's like Jesus goes into the temples to rid them of moneylenders.
Right.
I mean, he could show up at what's the equivalent of Hillsong in the United States? I don't know what it is, but basically where they've brought so much money into religion that it's perverted it.
Right. Right.
I think that religion shouldn't be money, and money shouldn't be religion either. But that's kind of where we are at.
Mm-hmm. Exactly. You're 100% on the spot there. So Bay Street Bank bear turns bullish as BMO after recent shock decline. So Canadian banks are in a bit of a trouble right now, and that's why they call Canada the Great Canadian White Short.
Yeah.
Yeah, everyone looks like they're going to be short in Canadian banks again. That's what it looks like on the horizon from other investors I've been speaking to. That a lot of if you look at the financials on a lot of these banks, it's just absolutely horrid.
You have the double whammy. You have the domain depends on what your currency is denominated in. I mean, if you're living in Canada, it's probably all right to short the Canadian banks. Mm-hmm. But you get paid back in Canadian dollars. So you've got to then hedge your currency if you're not based in Canada. I mean, you probably want to do it anyway, but...
Yeah. The Great Canadian White Short. So let's go back on the markets here. What do we got going on here? We have 10-year bond is just slipped below 1.6. It's sitting at 1.5 now. NASDAQ is sitting at 7,765. Canadian dollar, where are you? Volatility's up. Let's check VIX. VIX should be up today, buddy. Let's check VIX.
15, 16.
Oh God, it's up 2 points, 13%. Yeah, so VIX is up again. So let's look at the 5-day. Look at VIX. Woo! Yep.
But I told you, as soon as there's illiquidity, the VIX will spike up.
Right, and when it rallies along with gold, right?
Yes and no. Mm-hmm. I mean, gold to me is a indicator of illiquidity, and VIX. When VIX is falling, then that's also an indicator that the market's liquid. Mm-hmm. So, I mean, there's going to be a lot of the time where gold and VIX are correlated. Like gold is like a long VIX. I mean, I did say before that I thought gold was trading as a proxy for long volatility. But I think there's more to it. I'm not quite sure of what I've got wrong, but I think there's more to it than that.
Okay.
I mean, it's good kind of heuristically. It's kind of like a good gauge. If gold's up, the volatility is probably up as well.
Mm-hmm. Oh, right.
But yeah, there's a bunch of things that I need to work on mathematically to figure out exactly what it is that I'm trying to say.
Yeah, exactly. Well, we'll keep you on the pulse and have you on the show more often so you can give us more indications on. I'm just thinking right now where everything's headed. They are officially in a recession right now, and I think Q1 of 2020, maybe Q2 of 2020, they're going to have to admit it by then because right now
Yeah.
nothing's adding up, and and then tonight someone's going to go on TV and say, "Whoa, look at our jobs and look at this. Our economy grew 2,000%."
I
Blah blah
mean,
blah. You know?
they're going to talk it up. They always do. I mean, George Bush was talking up the US economy in '06 and '07. So, '06, '07, everything's fine. Oh, wait, Lehman Brothers failed. So it's kind of like, you know, it doesn't take very long for things to flip on a dime.
Mm-hmm.
So it's all very well for them to say everything's fine.
Yeah.
But I think they kind of have this approach, which is typified by what was that example from Mad Money? What's the guy that runs Mad Money? You know what I'm talking about, right? That's on CNBC. And he said they had to open the discount window, and you've got to basically say nothing.
Uh huh.
Um,
I'm not sure
uh,
who.
Jim
Isn't it
Cramer. Jim
Kramer? Kramer
Cramer.
guy. The Kramer
Yeah,
guy
yeah,
with the
yeah,
beard, right?
yeah, yeah.
Yeah.
So he was basically like, "Don't say anything. Just pretend that everything's fine." Now, if that's what they're saying, or that's what he's saying to do, then there's probably been a bunch of times where they've been flying really close to the wind and they just won't say anything.
Wow.
So I've kind of the more I figure out about markets myself, the more I'm like, this is a lot more shaky than what everyone lets on.
Well,
Like,
yeah. You always do the opposite of what the government says. If they say they're here to help you, they don't. They're not there to help you. If they say we're doing fine, we're not doing fine, right? So
or if we're going to reduce your income tax, then we're going to introduce a bunch more to
yeah,
make up for the fact that we lost revenue.
yeah, we'll rob Peter to pay Paul back. Don't worry.
No, but they're robbing Peter to pay Peter. It's kind of like this really weird. Um, it's like Orwellian language that they use to
Right.
say, "Oh no, we're not going to increase taxes on you. We're just not going to call it a tax.
Yeah,
Like it's still a tax.
we'll call it a love bomb.
Call it an excise, or
Mm-hmm.
we'll call it a duty, or a bunch of other things that don't say the word tax.
Mm-hmm.
It's a tax.
Yeah.
It's a tax."
All right, Andrew. I'm gonna let you have your breakfast there or dinner and wherever time it is there. And
That's pretty early,
huh?
but yeah, it's pretty early.
Yeah, it's pretty early. Yeah, go do your thing, and we'll talk later in the day. Okay, buddy?
All right, sounds good.
Have a good one. Thanks for coming on the show, bud.
No worries.
All right. So that is our man Andrew Baker on the ground in Australia, giving us a little bit of an overview on what's happening. Um, yeah, that's what's happening right now, guys. So, is America in a recession? Am I dead wrong? Well, I don't know. I don't. I think I'm on the money with this one this time. I never called America. I said Canada was in a recession, and I know I was right about that because the way that we're definitely in a recession right now because our economy's been shrinking. So something is got to kind of fall into place where people, the more they tell us that we're doing fine, guess what? Yeah, you know the answer to that. So there it is. Gold features up 1,506, up almost $20 on the day. Where's silver? Come on, silver. Where are you? Silver, silver, silver. There's silver right there, up 37 cents on the day. And a lot of it has to do with the increase in the U.S. dollar is looking like it's increasing right now. Let's see against the Canadian dollar if it's going. Yep, it's fallen to the Canadian dollar is still hovering around the 75-cent mark, but it is taking a plunge here for the day. There it is. So they're pushing. They're pushing. There it is on the 5 days, so you guys can see it there. There it is down here. So let's see what happens. Let me know what you guys think. Let's look at Bayhorse, my silver stock. Here it is, Bayhorse Silver. There you go. It's up 13 cents. I bought more. I bought a whole bunch of it the other day when it went down to like, I think it was 10 cents. It went down. I bought a whole bunch more. I did buy a lot of gold and silver on the dip, guys, yesterday. And the day before, yesterday, I bought a whole pile of gold and silver stocks on the dip. So I'm sitting green today. I was sitting red yesterday. Oh, the day before yesterday, I was sitting blood red. But looks like everything's looking like, and looking like it's starting to. Look at that. Bayshore reports gold occurrences in historic Brandywine core expands claims to cover historical gold. So they're on a historical gold vein. Bayhorse. I call him Bayshore. It's Bayhorse Silver. So guys, this is not an investment channel. I am not giving you advice. I'm just kind of talking. People keep asking me what stocks do I own. This is what I own right here. This is one of them right here. And I keep buying on dips and, you know, so there it is, guys. Let me know what you guys look. Wow, look at the room this stock has to grow. Wow. Look at the room. Look at the ceiling it's got. Remember, it only has a market cap of 13 million, so be careful, guys, with these smaller stocks, okay? Anyways, guys, let me know what you guys think in the comments below. I would like to know what you guys are feeling here in the markets. America's in a recession. I'm sorry, guys, and I'm gonna call it. Who am I? Nobody. But everything's there, and everything's pointing to recession, recession, recession. Guys, I want to thank you for your support, and if you want to support this transmission on, don't forget to subscribe to my channel here, for starters. And if you want to share a video, go ahead on the channel and share a video. If you guys also want to tip me in the tip jar here, or support me on Patreon, or follow me on Instagram, you're more than welcome. Go ahead and do that. Yeah. So there it is, man. I want to thank everybody for supporting this transmission. And yeah, go ahead and share something. And that is Can't Read Market Talk. America is in a recession. And that's it. Mike Martin signing off.